Solo Elf wrote a comment to one of my Twitter posts. I'll just read it out and explain the graphic he drew as well. So I posted this post on Twitter, just explaining a break in market structure. If you're unfamiliar, it's just if we have a market structure established with higher highs or higher lows, as soon as we no longer get higher highs or higher lows, we have a break in market structure. And the opposite is also true if we have lower lows and lower highs, and then suddenly that is no longer the case. We have a bullish break in market structure, right? So it's just when did the market structure start to change? So here's what Solo Elf wrote. He said, I always thought to break market structure, it had to be more like this. Do you think your way gets you into what could be quicker market structure change? And have you seen much in performance with either way of doing it? So I'm assuming what he means is this is the change of character, and maybe he's saying that this is the break in structure. I'm assuming that's what the post means. Solo Elf, if that's not what you meant, please correct me. So basically, here's my take on it. I don't think that there is objectively one way which is better than another. I think ultimately what matters is how much lag do you have when defining these market structure breaks. Okay, here's what I mean. So imagine we have a bullish structure, and then it, actually, you know what? Okay, bullish structure, and then we have bearish structure. So clearly somewhere here, something happened in this range or in this area, which caused a reversal in the direction of price or the trend, right? So you can say that, okay, I think the break of structure happened here because this is where the first low kind of gave out. That's one definition. Another way is, well, I don't want to go for this first low breaking. I want to go for the next low that broke. You could go for the third or the fourth, and so on and so forth, right? You can just keep doing it indefinitely. So it basically just becomes like a matter of how early or how late are you entering. And there are pros and cons to either one. If you enter on the earlier structure break, so like the first low, like price literally touches the first low. It didn't even close below it, it just touches it. This is like the earliest that I could possibly think of. Your frequency is going to be higher. So how many trade opportunities are you even going to be able to have? That number, of course, is going to be higher. But unfortunately, your win rate is going to be lower because there are going to be a lot of times where you just get faked out to a little bit of an outlier, right? So your frequency is lower, your win rate is lower. Actually, you know what? I'm just going to pull this down here just so I have a little bit more space. So frequency is going to be higher, your win rate is going to be lower, but your max upside in the trade, this is going to be higher. Because if you're entering earlier, you have more room to catch a trade, right? So you can maybe be a little bit more ambitious with your targets, right? So you have, if you're entering with less lag, as in you're entering earlier, or you're defining this break of structure earlier, right? You're going to have higher frequency, lower win rate, but there is more upside in the trade idea that you can potentially catch. If you are entering later, so not on the first one, but maybe on the second or on the third, or even if you're using these prior levels as well, like you're saying, nope, I'm only going to enter on this one, on the break of this one, right? So that the later you are entering, your frequency, so how many of these trades are you able to catch? Your frequency is going to be lower. Your win rate is going to be higher. And your maximum upside that you can catch is going to be lower. So frequency is lower because there's just going to be fewer opportunities to catch, win rate is going to be higher because the later you are entering, the more information you have to confirm your original idea. So you have more margin of error, you have more confirmation, you have more confluence, right? So win rate is going to be higher. But your maximum upside in the trade, so how much room is there left to catch, it's going to be lower, right? Because you're entering later, so you've already missed out on some, like, a bigger section of the move. So whether you're taking these breaks of structures earlier or later, one isn't objectively better than the other. There are pros and cons. So here's how I think about it. The more confident I am in the fact that, or the more confident I am in the idea that I think the market conditions are now changing and I think a reversal is due, the more external factors or the more points of confluence that I have in a regime change or a break of market structure, the earlier I will enter, right? Because I want to be able to catch more upside. The less confident I am in a break of structure, so this is just me looking at my other variables and looking at how much confluence I have. So the less confluence I have, or the less confidence I have in a regime change, the later I'm going to need to enter, because I need something to compensate for my lack of confluence. So I'm just going to enter later. And I'm totally fine with entering really late. Like, okay, for example, right? For example, imagine there's a crazy downtrend and then we have a bit of a staircase and it looks something like this. Does that mean that, oh, yep, this is accumulation and we got a break instruction here? Yep, it's that's the low. It's time to full send it, right? I'm not really in the business of taking these giant trades. That's not really my thing. But if we had something like this, and then it starts trending like so, and then the volume during this time is increasing, and let's say there is some big level up here as well, and this is like 2 hours of staircasing price action, I'm more than happy to go and take this trade. And like when you're looking at this kind of chart, it might look like, oh, well, yeah, I'm just taking a breakout trade of this level. It has nothing to do with the fact that market structure broke somewhere over here. But in reality, it's this momentum trade, like me taking a trade from here, like a small trade from here to here with the stop loss somewhere here. This is actually like me taking a trade based on the break of market structure, but it's like really delayed. It's like so many structures have been broken continuously for an extended period of time because I needed to use all of this as my confluence to enter the trade. And I'm not trying to catch a massive ripper of a move. I'm just trying to go from like one level to the next level and I'm out. That's it, right? So earlier entries, when I'm more confident in the idea based on how much confluence I have. Actually, it's just like this. More confluence, earlier entries, less confluence, later entries. That's basically how I think about it. But yeah, I hope that answers the question and just clarifies some things with market structure breaks. If you have any follow-up questions on this topic, just drop me your questions in the comment section below, and I'll get back to you in a video format just like this. Anyway, thanks for the question. And by the way, if you're serious about improving as a trader, I'd like to invite you into my free Telegram. Here's what you're going to get inside. You're going to get a 100-page guide on how I trade breakouts. You're also going to get a 214-page guide on how I trade reversals. And by the way, these two guides, I go really, really in depth with the strategies, with the theory, with the logic, and also I include like total combined within these two guides, there's more than 75 trade screenshots for you to study, like through just continuous repetition, and it's going to help you train that pattern recognition of seeing the exact same thing happen over and over again. Also, you're going to get a custom trading journal that I built, which makes it really easy for you to track your trades, but also to review your trades. Like literally in the journal, there's a tab called educational resources. And in there, I have a template for reviewing trade screenshots and guide to show you the process for how to actually review your trade screenshots to improve your performance over time. And also a whole bunch of other stuff as well that I give out for free in my Telegram. So if that sounds interesting, click the link in the description to join.